Tax bill's attack on higher education undermines America's economic vitality. With the Senate's passage of the Tax Cuts and Jobs Act, President Donald Trump seems close to notching his first legislative victory, a huge tax cut for the 1%. All that remains is the need to reconcile the Senate bill with the version passed earlier by the House of Representatives. The bill is a travesty. Never have so many been forced to give up so much to benefit so few. The president's claims to the contrary notwithstanding, this is no wonderful Christmas present for the American people. It's more like a grimy lump of coal, many lumps, in fact. In a pair of bills that each runs to more than 400 pages, it is not hard to find objectionable provisions. As a longtime academic, I am particularly appalled by the treatment of America's colleges and universities, the widespread network of institutions charged with training America's talent pool of the future. The Republican plan undermines what its backers claim is their goal, boosting America's economic vitality. Here's why. Targeting higher ed. For instance, as part of its effort to pay for the generous tax cuts for corporations and the wealthy, Republicans aim to impose a 1.4% tax on investment income at private schools with endowments worth at least $250,000 per full-time student. This would affect as many as 70 schools and cost them an estimated $2.5 billion over a decade. Not only will that shrink the resources available to support research, much of which helps to fuel the nation's economic growth, it will also make it more difficult to hold down rising tuition expenses, thus closing off educational opportunities for many students from lower and middle-income families. Public universities in states like New York and California can also expect to be hard hit by the bill's elimination of the federal deduction for state and local taxes. Since this change will actually add to residents' overall tax bills, state governments are bound to come under voter pressure to offset them with tax cuts closer to home, which in turn will require corresponding expenditure reductions. Public universities, by definition, tend to be highly dependent on the public purse for their revenues. That makes them particularly vulnerable targets when budgets are slashed at the state level. Those of us who teach in the University of California system, for instance, still remember the pay cuts we all had to endure when Sacramento's budget was hit by the Great Recession of 2008 to 2009. Funding for the system as a whole was cut by 40%, leading to an exodus of faculty, tight limits on new hires and severe limits on financial aid for students. It took years for support of instruction and research to return to pre-crisis levels. And even more egregious are some reforms in the House version that might yet make it into law depending on how negotiations with the Senate turn out. The House bill is far stingier than the Senate's when it comes to higher education. For example, House Republicans propose eliminating a benefit that lets some taxpayers deduct student loan interest. That too will close off opportunities for many poorer students. The House bill also takes aim at a break that presently makes graduate school more affordable by allowing students to work as research or teaching assistants for tuition waivers that don't count as taxable income. Counting these waivers as income would make graduate school unaffordable for tens of thousands of current and would-be students. All in all, the House bill alone would reduce tax incentives for higher education by an estimated $64 billion over 10 years. Higher ed's economic impact. Whatever the final shape of the Tax Cuts and Jobs Act, the provisions targeting higher education will have adverse economic effects that will be both substantial and long-lasting. Numerous studies have shown that a college education adds substantially to an individual's lifetime earning potential. Research by the College Board, a nonprofit that helps students prepare for college, shows that the median income of bachelor's degree recipients with no advanced degree and working full-time in 2011 was $56,500, some $21,100 more than median earnings of high school graduates. Put another way, the benefits of a four-year college degree are equivalent to an investment that returns 15.2% per year, over a lifetime. And the earnings premium grows even wider for additional years of study. Furthermore, over time individual earnings tend to rise more rapidly for those with higher levels of education, and unemployment levels are significantly lower. The evidence is strong that these benefits bolster the overall economy as well. Zvi Griliches, a Harvard economist who died in 1999 and was a specialist on the topic, found that the historical growth of years devoted to higher education and other advanced training accounted for about a third of productivity growth in the U.S. economy over the 50-year period he examined. These productivity gains, in turn, translated into higher output and incomes for the economy as a whole, adding substantially to America's wealth. Evidence also suggests that regions with a higher proportion of college graduates tend to have lower crime rates, higher levels of civic participation and improved performance across a number of other socioeconomic measures. Shattered dreams, stunted economy. In its essence, the Tax Cuts and Jobs Act embodies a contemptuous disregard for intellectualism and expertise that over time can only erode the quality of the U.S. workforce. Many schools will see their budgets cut. Faced with higher fees and tuition, many students will be forced to drop out, their dreams shattered, their earning potential stunted, their contribution to the American economy significantly curtailed. America will not be made great again by attacking its system of higher education in such a mindless manner. Legal experts split on what Flynn guilty plea means for Team Trump. Former White House National Security Advisor Michael Flynn pleaded guilty Friday to lying to the FBI about contacting Russian officials on behalf of then-President-elect Donald Trump. The plea by Flynn, the first White House official to be charged in Special Counsel Robert Mueller's investigation, electrified Washington and set off intense debate among legal minds about what it portended for the future of the Trump White House. Andrew McCarthy, a former assistant U.S. attorney, argued that Flynn's admission may not be a significant break in Mueller's investigation. Flynn, like former Trump campaign advisor George Papadopoulos, is being permitted to plead guilty to a mere process crime, McCarthy wrote on National Review Online. For all the furor, we have a small potatoes plea in Flynn's case, despite extensive collusion evidence. McCarthy went on to argue that it is becoming increasingly palpable that, whatever collusion means, there was no actionable, conspiratorial complicity by the Trump campaign in the Kremlin's machinations. McCarthy also noted that Mueller's other significant criminal case, against Trump's former campaign chairman Paul Manafort, has nothing to do with the 2016 election. However, Los Angeles defense attorney Ken White, himself a former assistant U.S. attorney, posted on Twitter that he was not as confident as McCarthy in the absence of a wider conspiracy. You generally spell out the entire conspiracy in a cooperator's guilty plea, in many cases, White wrote. With more sophisticated cooperators, you play the cards closer to the vest. Yes, you'd get a drug mule to spill to the whole conspiracy in the plea to lock them in, White added. A Flynn? Maybe not. National security lawyer Steve Vladeck echoed White, tweeting that the story isn't that Michael Flynn is pleading guilty. It's what he's giving Mueller in exchange for such a minor charge. We may not know the answer to that for some time, Vladeck added, but I have to think it's substantial. Fox News judicial analyst Andrew Napolitano was less circumspect, characterizing Flynn's plea as a nightmare for Donald Trump and probably the tip of a prosecutorial iceberg. However, Napolitano also told Shepard Smith reporting that if Trump told Flynn to reach out to Russian officials after his election last year, that may not be an impeachable offense, though they certainly are in the category of offenses that are impeachable. Beyond this, the President of the United States has steadfastly, repeatedly and consistently denied that he had any knowledge of any involvement with the Russians, Napolitano added. If General Flynn contradicts that in a credible way under oath, we have a very serious problem on our hands. Senate passes major tax reform package. The U.S. Senate voted just before 2 a.m. ET Saturday to pass a sweeping tax overhaul worth roughly $1.4 trillion, putting the Trump White House a big step closer to its first major legislative victory, and many Americans closer to a tax cut. The vote was 51-49. With Republican Bob Corker of Tennessee the only member of the GOP to side with the Democrats in opposition. The bill is still not yet finalized. Saturday's vote means the Senate and House have passed similar tax reform plans, but negotiators from both chambers will start meeting Monday to agree on a single piece of legislation that both chambers must approve before it is sent to President Donald Trump for his signature. Here's how the latest legislation would affect you. What deductions can I claim under the Senate bill that just passed? The Senate bill does away with federal deductions for state and local income and sales taxes, but allows deductions of up to $10,000 in local property taxes. The legislation originally eliminated federal deduction for all state and local taxes, but the property tax exemption was later added at the insistence of Senator Susan Collins, Republican Maine, who said she was delighted about the change. What about personal deductions? Like the House bill, the Senate bill nearly doubles the standard deduction level to $12,000 for individuals, up from $6,350, and $24,000 for couples, up from $12,700. Any other deductions I could claim? The Senate bill retains the current limit for the home mortgage interest deduction to interest paid on the first $1 million of the loan. The House bill reduces the limit to $500,000 for new home purchases. The Senate version also preserves the deduction for medical expenses not covered by insurance. The House bill does not, but ends deductions for moving expenses and tax preparation. Why does the Senate bill allow deducting medical expenses not covered by insurance? Because the Senate bill also repeals Obamacare's individual mandate, while the House bill does not. If Obamacare's mandate is repealed, thousands of people are expected to drop their health insurance, raising the cost for those who decide to keep it. And the personal exemption? The Senate and House bills both eliminate the $4,050 personal tax exemption. Will the tax brackets change at all? The Senate bill keeps 7 tax brackets, but reduces them to 10, 12, 22, 24, 32, 35 and 38.5%. The current brackets are 10, 15, 25, 28, 33, 35, and 39.6%. The House measure condenses 7 brackets to 4, 12, 25, 35 and 39.6%. I own a small business. What would this mean for me? The Senate bill allows owners of so-called pass-through businesses, that is, businesses that aren't incorporated, to deduct 23% of their earnings, and then pay at their personal income tax rate on the remainder. This issue was a key concern of Senators Ron Johnson, Republican Wisconsin, and Steve Daines, Republican Montana, both of whom announced this week that they would support the bill. What about corporate tax rates? Like the House bill, the Senate bill cuts the current 35% rate to 20%. But the Senate bill calls for a 1-year delay in dropping the rate. When will tax reform take effect? President Trump and congressional Republicans had vowed to make tax reform law before the end of the year. If that happens, most of the provisions would come into force on January 1st. Will tax reform affect my returns for this year? The changes will not have any impact on your taxes for 2017. Which are due to the IRS by April 17, 2018, you get an extra 48 hours to file because the traditional April 15 due date falls on a Sunday. So when will the differences in the bills be hashed out? The House will vote on a motion to go to conference on the tax bills on Monday evening. The Senate is expected to vote on a similar measure soon after. Congress is scheduled to adjourn for its Christmas break on December 15. But House Speaker Paul Ryan has said he will keep the House in session beyond that date if necessary to get tax reform passed.